Coleman Conversation. Chuck Evans. Chuck, I've known you for a while. My first comment is everyone you meet, you treat like a friend. You have effervescent personality. Great. But I'm going to start this out with the question everybody in the industry wants to know. It says here you are JM Chuck Evans. What does JM stand for?
All right. I've been explaining that since first grade. I am Joseph Martin Evans III. My mother wanted to name me after my father. We weren't senators. We were dairy farmers. But my father wanted to name me Chuck after his duck hunting buddy. So I'm Chuck from birth, but Joseph Martin Evans III is my real name.
Well, if you run for senator, I'd stick with the Joseph Martin III.
You're right.
But back to my original statement, Chuck. Where do you get that from? You have a great personality. Tell me about how that's helped you through your life. Go.
It's been good. You know, I look at the pedigree of some of your guests on here, and I don't have the pedigree of Barry Sloan, Chris Hearn, or certainly Brent Cherlino, but it's been pretty colorful. You know, I was a hippie in college, started with Wachovia Bank right after I got married, and that was a blue blood bank in North Carolina. Went through the formal credit training, moved from North Carolina back to the Philadelphia area, worked for a regional bank there, managed a small business lending group, and then I started a business. And so the first thing I learned in industry, you could be lucky, right? You could be good, but many times you're lucky. The second is, as an entrepreneur, and I enjoyed Chris's talk with you, it's eat what you kill. So I learned when I was in business for myself that if you didn't do it, if you depended on anyone else to do it, you're not going to be as successful. So that helped me. That business was modestly successful, and it got to the point where my son was getting ready to go to University of Pennsylvania. Now, I wasn't an Ivy Leaguer, but my kids were. And Karen, my wife, said, Chuck, you better get a real job. So I was on the advisory board of a CDC, Seedco in southeastern Pennsylvania. And they wanted to grow their 504 program. And I said, okay, let's do that. So I went in 4 months, they put me in charge. I couldn't spell SBA. And one of your other guests said that was when he started. And so the second thing that I learned is, well, like I said, luck, eat what you kill, and then admit that you don't know and get help. So as the CDC, and there's many of them out there like that, and many banks that are like that, you admit you don't know and you get help. So I brought in, I don't know if you knew Mary Kropp. She's been in the CDC industry for years. She helped me kind of straighten it out, work it out, and get it to where it was humming. So the 504 business started to grow. And of course, the board wanted us to expand our offerings. So there were 33 CDCs back 10, 12 years ago that were packaging 7A loans. So we decided to do that. Help the community banks that we were serving. They were coming to us, Bob. We weren't having to sell anything. And what I found was that even if you are the best processor, closer, and servicer, if you don't help those banks in driving business and creating risk profiles, it's all for naught. That was another lesson that I learned. So this business started to grow. I got a little bored, and three of us formed Prudent Lenders. It was NYBDC, CDC Small Business Finance, and myself. And that was when the Community Advantage program came out. So we had a good bit of those mission-based lenders, had a great time. It's what got me up in the mornings. Got lucky again. We had a couple large accounts, and that paid the bills. And finally, there was a time where there were three of us, and I decided to move on and took over a struggling LSP and turned it around thanks to Vinny at Stone Bank, who was one of my clients, and merged with Windsor. And so Windsor, I think, is the largest LSP today, has a great reputation. Mike Breckheimer is a good friend of mine. And I was going to retire, bought a sailboat, and discovered that I'm not very good at it. My wife didn't enjoy it like I thought. So I said,
I'm sorry, are you talking retirement or the sailboat?
Retirement and sailing.
No, those are two different things. Which one were you good at?
Sailing. So I said, well, listen, I want to get back into this. And so Patrick Kelly, Patrick,
Of course.
suggested that I contact Lenders Cooperative. He said they have a great reputation. Two good friends at the SBA also said, Chuck, you should look into these folks. So we got together. I joined them as their, what they call it, executive director. Lenders Cooperative is part of Summit Technologies, which is based in Mechanicsburg, PA. Started out as an IT bank consulting firm. And then just before PPP, they were rolling out a loan platform for about 40 banks. PPP hit, and we had to pivot. So what they did, they developed the PPP platform for the SBA. They developed the disaster relief program for the SBA. They redid Lender Match, and I think the restaurant revitalization. There's 140 grant and loan programs out there that need this kind of technology. So that's our core business. We formed Lenders Cooperative to take that government contracting portion and move it over to the private sector. So we're providing a loan operating system to banks, credit unions, and CDCs. We purchased Ventures beginning of this year, and Ventures was the servicing platform for probably 95% of the CDCs in the country. So now we have an end-to-end system that's going to be pretty cool. But that's not where I sit. I sit on the LSP side of the house, and that's relatively new for Lenders Cooperative. Maybe 3 years ago in Birmingham, Alabama, we had 4 banks that totaled $75 billion, and 1 left, 2 merged, and that displaced a lot of folks down there that had really good credit skills. So we lifted out a whole team in Birmingham that's worked together for years, underwriters, and formed our LSP around that team. So our origination, closing, for the most part, is down in Birmingham. Our servicing group is up in Mechanicsburg. I think we're getting the Department of Education, SBA, Perkins loan servicing platform. So it's growing in leaps and bounds. And my value to the company, I think, is back on some of the lessons that I learned. The community bank that came in and said, we want to do $10 million this year, and they didn't do anything. So my role was to nurture these new clients and get them to where they're productive SBA lenders.
Chuck, this is the easiest interview or conversation I'm having. I'm just going to let you talk, but I love it, and I appreciate. I hear your passion in your speech. I love it. But I got a very second important question. Over your shoulder is a newspaper. I'm a big historian. What is that?
There's a newspaper, the Oxford Press in.
Thank you. Yes.
And yeah, the Oxford Press. 1863, I think. I got a couple of them.
Any particular topic in there?
That's where I'm from originally.
Awesome. I love it. Chuck, why SBA? You got the real job. Why what interested you in going to work for a CDC and get involved with SBA lending?
Well, I really enjoyed the work, the economic development aspects of the CDC. That's what got me started.
Okay.
7A pays the bills. The economic aspects of the CDC got me excited. And when we got involved in the Community Advantage, that was powerful. Now, if you think about it, there's 1,500 lenders that approved an SBA loan last year. 1,000 of them did less than 10. That means it's a root canal for the borrower. It's frustrating for the lender, and it keeps folks like us in business, LSPs. And today there's 94 LSPs that have contracts with clients. And we've started a quarterly group. Nagel and Okram are going to help with it because we're basically an unregulated industry. We're a 4-letter word still at the SBA, aren't we? Basically.
Yeah.
And so the idea is most of these LSPs do it right or want to do it right. There's a few bad eggs. There always is. And so that's a challenge for us in this industry. And I just love challenges.
I'm a senior executive of a lender, and I'm listening to you, and you understand you have a number of years in this industry. What is your message to C-suite executive management on managing your SBA loan portfolio in 2025 going forward?
Take it seriously. Don't be one of those lenders, those 1,000 lenders that are going to do 4 loans, because that's not a focus. That's a tool in your toolbox, and it's not going to be a pleasant experience. That's why we have that reputation. It's not hard to develop a program where you can start doing 10 to 30 loans. And then if you want to take it from 30 to 50, I think there's from 10 to 30, there's probably 250 lenders out there. It's still the 80-20 rule where 20% of the lenders do 80% of the volume, but you can really do well with this. I mean, if you're going to do 20 loans at $1 million a piece, that non-interest fee income pays for that department. So the challenges, the barriers to entry. Number one, shortage of staff, cost of underwriters, better than anybody, and closers is 40% more than it was years ago. The fear of losing the guarantee. We had the old SOP, the new SOP, now back to the old SOP. And if I'm only doing 10 loans a year, I can't keep up with it. So the key is to get help. Like I said, what I learned that when I started the CDC. Surround yourself with, Starfield and Smith, Nick Jellum, attorneys that know what they're doing, people in the industry that know what they're doing. Make sure you go to them and get questions answered. The LSP industry is a great one to be in because there's a lot of opportunity as long as you're doing it right. Susan Strike said to me once, Chuck, she goes, Chuck, it's not hard doing things right.
I'm going to name you SBA administrator for a day.
Okay.
Solve the root canal problem. What are you going to do so it's not a root canal for the borrower?
I would repurpose the field offices to where they are trainers, teach them to go out there and not be just advocacy, but formalize some training for these 1,000 of the 1,500 lenders that are dabbling in it. They're incentivized to do touches. But what's happened when we were sending loans to the district offices for approval, we were getting people that knew credit, that knew SBA. Today, it's more of an advocacy thing. And I think if we repurpose the field offices, that would be a first step. Making sure we're focused. There's great learning opportunities with you, with Nagel, with Shatterbox. I think that if I was starting I would jump into this with both feet. Today, with Lumos technologies and things, it's different than even 10 years ago. You can develop a risk profile using analytics and expected losses versus something from the seat of your pants. And, we go from
Chuck, I disagree with you. Not 10 years, 2 years. The technology is moving so quickly and so fast. And the access to what not only the borrowers, but what the underwriters and the bank has and all the resources to make good loans. How often?
One more point,
go ahead.
Bob.
Of course.
Okay, that was my first thing with the SB. The second one.
Oh, I'm sorry. Okay, we do that. We break for lunch. Now we're back. All right, what do we do in the afternoon?
No, I mean they're making all the PLP lenders submit PLP, right? I think they should allow them to do GP until they get comfortable with it. That makes sense?
I understand why SBA. The answer is yes. And
they're cutting costs through what they're doing. And I understand that too, because we've been operating in the red for so long, but It doesn't help those thousands of the 15 lenders become better. Does it?
Yeah. See, my issue with that, Chuck, is I tend to be more, let the lenders make the decision. Chuck, if the lender wants to refinance a borrower who has a merchant cash advance, if the lender wants to do that and it makes sense, don't prohibit the lender to do that. Conversely, if the lender really needs to have an answer and it has this gray area of eligibility, let them go GP. I'm with you 100%.
Cool.
Yeah. You're not retiring, are you?
No.
You said you were bad at it.
I'm having fun. I want to come back and do this with you more often.
I gotta go back to the boat. What happened? You sink the boat? Was it just you and your wife on the boat and that didn't work out?
We took an overnight trip up the C&D Canal and I grounded it on the way up. And when we got there,
whoa, no, come on. What do you mean you grounded it on the way up? I'm not a sailor, but that doesn't sound good.
It wasn't good. And then we hit sand. And so my wife and my dog were sitting in the cockpit, and I said, I have to act like I know what I'm doing.
Well, yeah.
So I got out, forward, reverse on the engine, and got out. And then we got to the the place that we were going to spend the night. And there was 200 people, 2 bands. They put us right in front of the restaurant on a fixed dock. So picture 2 60-year-olds trying to climb up a pole and get to a restaurant. It was ugly.
So you enjoy what you do more than the sailing. What motivates you to this day to continue to work in this space?
Because I see banks that want to do it and they don't know how, literally. And there's a real need. I'm enjoying myself. You don't have to work that hard anymore when you get to this age.
Well, you're still working hard. You're now a podcaster. Tell me about 30 at Noon. You and I have been around for a while, but my grandkids saw me on YouTube the other day, and my 13-year-old granddaughter said, "What, Papa?"
Well, it builds brand. We have great training programs with Coleman, Nedco, Nagel, and so bringing industry stakeholders to introduce them to an audience is great. We've had like you, Brett Ciurlino, some of the real successful SBA managers, and we're not trying to teach or replace any kind of training, just expose them to other industry stakeholders and talk like we're doing today.
I'm very impressed. What is your advice for someone new into our industry in terms of what do you tell them?
I would say embrace it. If one of my kids was of an age that they wanted to do this, I would have my children in this business. It is one of the best. And why? It pays a little bit more, but that's not it. There's a real need out there. Some of your other guests have talked about the value of the SBA. If we didn't have this guarantee, you're not going to do as much franchise lending. It's all unsecured with a government guarantee. Who's going to do that? Now, there may come a time when there's an insurance product that will compete with the SBA, but until that happens, we got to make this successful.
And they've been talking about a competing insurance project since you and I have been around, and it has not occurred. Very good. Chuck, give me a projection on small business. My last question, so hit it out of the park. Small business, Main Street businesses. We all know how important it is to the economy, but with the new $10 million cap that will happen, who knows when, but it will happen. The special programs to incentivize manufacturers, American jobs. What summarize in terms of how important is SBA to that entrepreneur, and how successful are those entrepreneurs going to be in the foreseeable future?
Well, if you think about it, last year when rates were 11 and a quarter, what did we do? $31 billion, 32, and rates at 11 and a quarter. So obviously there's a need. And so if the SBA offers more products that serve more people, that's going to just increase this. I mean, if volume didn't drop when we were charging 11 and a quarter, it's not going to drop when rates finally get lower. Am I right?
Very good. Excellent analysis. Joseph Martin Evans III. I enjoyed the conversation. Thanks, man.
Thank you, Robert. See ya.